Major funding for these programs is provided by grants from First American Title Insurance Company of New York, Perfect Building Maintenance, Murray Hill Properties, Bank of America, SJP Properties, Allied Partners, Greenberg Traurig LP. Additional funding is provided by grants from Arbor Realty Trust, Antares Investment Partners, Athena Group, BRT Realty Trust, Burden LLP, CB Richard Ellis, City Habitats, City Investment Fund, Cushman & Wakefield, Eastern Consolidated, Essex Capital Partners, Gemini Real Estate Advisors LLC, Herrick Feinstein, Helmsley Spear, Jackson Development Group, John Katzimatidis, Herbert J. Sims Company, James D. Kuhn Real Estate Institute at Syracuse University, Kilroy Metal Products, Madison Realty Capital, Marcus and Millichap, Meridian Capital Group, M&T Bank, Must Development LLC, Newmark Knight Frank, Palin Enterprises, Rosenthal and Rosenthal, Sidney Fettner Associates, Sheldrake Organization, Signature Bank, Studley, the Moynihan Organization, Triangle Services, the Witkoff Organization, Extreme Contracting and Deconstruction.
Hello, my name is Michael Stoller, host of the Stoller Report, Real Estate Trends in the Tri-State Region. What's happening in the office market? You know, there's a perception that since we are in a recession, and I don't care what anyone says, we are in a recession, that the market may be slow. But the office market is still vibrant and resilient in New York City. So today I brought together three people who really know what's going on in the office market. My guests today include Joe Harbert, the CEO of the Tri-State Region of Cushman & Wakefield, Mike Colaccino, president of Studley, and last but not least, you know, he's like the returnee. He's been with me too many times, a good friend, Ken Swig, who is the principal of Swig Equities, and also a leasing broker, being the president of Helmsley Spear. So this is a great time for owners. You know, you're an owner and you're a leasing broker. I mean, so tell me what's going on. What's happening with the office market, Ken?
I would have to say that...
I don't know which side I'm talking. Is it the left side is the owner or the right side is the broker?
That's the same thing as my wife always says. She doesn't know what side she's on. I would have to say that the market, the real estate market itself, the commercial market itself, is very strong and good. The problem that exists is more on the capital side, the banking side. But the real estate market, I think we're at a relatively an all-time low in vacancy rate. We are certainly at an all-time high in terms of rents in the city, and I think that combination tells you, you know, right there that we're in a pretty strong commercial market.
But what about with 60,000 layoffs? I mean, if you take, you know, 5,000 square feet per space, I mean, isn't that going to lose some space? Joe, Mike?
60,000 layoffs. The question is where. You know, it would be very interesting to study how many layoffs actually occur that are announced by CEOs of major firms. We haven't seen a dramatic impact yet in New York City. Some layoffs, some sublet space trickling back into the market, but you're still around 1.2% on sublease vacancy, so it's not really significant yet.
Definitely hasn't happened yet. That's the key point, is the announcement lags or precedes the actual layoff, which precedes the actual delivery of space to the market. So I'd say we're in the second inning of a 9-inning game. And that the real impact of this is going to be in 2009. And I think if there's 60,000 white-collar jobs that are lost in New York, that could reflect as much as a 2 or 3% change in the vacancy rate, which would put you closer to the sort of frictional rate where prices will adjust.
Now, you represent most of your you represent tenants most of your time. You do both. You're a landlord and everything. How do you see tenants today? Are they apprehensive that they said, you know, maybe I'll wait a little while longer before I sign a lease because the landlord, like Mr. Swig, might reduce his rents? What's happening in that?
Well, the smart ones who started early enough to have an opportunity to reconsider I think are fairly tentative right now. Unfortunately, a lot of people tend to wait towards the end of the expiration, towards the end of the lease term, and as a consequence, they're being jammed by the necessity of doing something in this market and not being able to wait. So I think the answer is depends on how early you started. The ones who started early are definitely in sort of a circling mode, at least for the next few months.
So what do you mean by the circling mode?
I think they're waiting to see what's going to happen in terms of the next 3 or 4 months and whether there are going to be massive putbacks to space by Wall Street, by financial service firms in the good neighborhoods. I think that that's something that people are expecting to occur by September, October of this year.
You know, Kent, you have a lot of space in Lower Manhattan that you own as an owner. Are you seeing any reduction in demand, or?
Well, we're in a position right now where we actually don't have much space at all. So we've got the opposite problem. We've got buildings that are right now rented well below the marketplace, and our problem is that we need more space so we can circulate tenants through, and as tenants turn over, we'll get much higher rent. So at the moment, we have no space, and that's probably our biggest challenge that we're confronting. But one of the things I wanted to touch on that you mentioned is that maybe 60,000 layoffs. And are we in a recession, which I would agree to. Certainly we are. By the time the economists tell us we are, we know that we're coming out of it by then. But if you look historically at New York in the 1970s, I think we lost 680,000 jobs, which in a period of time, added on top of that, obviously, was the 1970s fiscal crisis. Then we built up. You know, we grew about, in the 80s, typically about 250,000 jobs. We lost between 89 and 91, 350,000 jobs. Okay. In March of 01 to December 01, we lost 250,000 jobs, which was about 9.8% of all of the American jobs lost. This time, if we're looking at 30, 60,000 jobs relative to what's happened in the past, while it's very tough, it's minor compared to the numbers before. But probably equally important is that New York City is going into, or walking into, the recession with an unemployment rate that's 100 basis points less than the national average, where the other recessions that we went into, New York City led the recession. We had 100 basis points higher unemployment in each of those 3 instances than we do today. So it doesn't mean it's not going to be painful necessarily, but it certainly means that we're in a better position to withstand anything, and the job losses are predicted to be much less, and our unemployment rate is already as low as it's ever been. So I think it bodes well for New York City in terms of going through this recession.
But for a supply-constrained environment as well.
But for 2008, the magnitude of the number of transactions, you know, that have taken place this year as compared to 2006, 2007, aren't we down a little bit?
We're actually up in terms of large transactions. In the first quarter of the year, there were 15 deals done over 100,000 square feet. Compare that to what was reasonably a hotter market in 07, where you had 2 deals done in the first quarter of that size. So large tenants are still out there, and we're finding that the bread and butter smaller tenants are out there as well.
Now, you said to me prior to the show that there's the large tenants still need space. There's a lag in the middle.
Yeah, we're sensing that there's a little bit of a hole in the middle of the market from maybe 30 to 150,000 square feet. I think those are some of the customers which are not big corporations, for whom these planning decisions take years, and they're going to look at those issues over a long period of time. These are people who are probably writing their own checks, and they're probably taking a little bit more cautious attitude towards the market right now.
Now, do you see that taking place with your clients?
I think that's fair to say. I mean, the larger firms do have the longest planning horizon, and therefore tend to a certain extent to be the ones that are subject most to market forces. Smaller firms can put on Band-Aids. They can do things to transition through a period like this in a way that a larger tenant can't. You know, if you're occupying an entire building and, you know, you're out of space or you have a lease expiration coming, you've got to do something. There's no 2 ways about it, regardless of the market. We
were talking about some of the suburbs, and, you know, certain people consider the Gold Coast, Gold Coast of Jersey City and Hoboken really a 6th borough of the city. Do you see any of the companies today jumping to Jersey City and Hoboken as they were a couple of years ago?
As I was saying before, I think that in 1993 and 94, almost every large tenant examined those markets, Westchester and Connecticut, with great intensity. In the last 10 years, people have wanted to be in Manhattan. They've moved to Manhattan rather than the reverse, and we haven't seen the number of searches in those markets. Most recently, we're finding that almost everybody that's out in the market today wants to at least take a look at the Jersey opportunity, and we're beginning to see people looking at Westchester as well. So, yes.